Hey, this is Matt from InvestiQuant. Today is Thursday, January 27th, 2022. This morning, the market's gapped up. We tested higher early on, and we have since rolled over. We just went below yesterday's closing price in the S&P and the NASDAQ. Dow has not quite made it there yet, but the others are all trading below the prior day closing price. And we've got inside days taking place in the S&P, which is this top left chart, as well as the NASDAQ. Looks like the Dow has a inside day as well, just isn't quite below the prior day closing price. But we're seeing some weakness with an inside day pattern taking place on sizable range. Easy to have an inside day when you've got 152 points of range the prior day, and you're opening well within the center area of that 152 points of range like we had in the S&P yesterday. So we've got 103 points of range in the S&P trading down at the low, strong volume taking place. But we're going to go ahead and set this up and take a look at this inside day pattern when you are trading below the prior day closing price going into the close. So I've got all four instruments selected here. We got a 3 p.m. Eastern time entry that will go long for the test, and the test will be based upon having an inside day as of 3 o'clock. An inside day, if you're not familiar, just means that the high of the session is less than the prior day high. So I just selected that by clicking the minus sign here in front of greater than prior day high. So it is not above the prior day high, and the low of today is not below the prior day low. So those two pieces of information make it an inside day. And then the other thing I'm going to add to it is that we are trading below the prior day closing price. So I'm going to say that the 3 p.m. Price is below the prior close by clicking equals here next to where's the intraday close relative to the prior close. That is selected. That is all of the information that I need there. Now I'm going to go to the indicators library, put us in a similar market environment. We continue to stay below the 10 and 200 day simple moving average. I've just added both of those to the test, and now I can click view results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you have an inside day forming, which means, a lower daily high and a higher daily low, and you're trading below the prior day closing price. This is taking place below a 10 and 200 day simple moving average. Historically, there's 37 samples of this pattern dating back to 2003. We've got 38 for the NASDAQ, 31 for the Dow, 41 for the Russell. If we look at the win rates on them, the S&P win rate coming in at 41%. The NASDAQ coming in 34%. The Dow, the strongest of the group at 55%. And then the Russell, 39%. So as a group, if you kind of add all those together, they are skewed towards the downside. If we look at the average moves, the average loss larger than the average one in the S&P. That is also the case in the NASDAQ. Not the case here in the Dow. And then the Russell just a little bit larger on that average win compared to the average loss. So historically speaking, 3 out of the 4 instruments have weaker win rates, and 3 out of the 4 instruments have larger average moves to the downside. So historically, it has been more of a bearish scenario going into the close. Hopefully you found that helpful. Good luck today. We'll see you next time.